Hello everyone and welcome to today's Commsave Educates webinar on the subject of dealing with major life events. My name is James Richards, I'm the Strategic Partnership Manager here. I'm really pleased you could all join us. Life has a way of bringing some major changes, some exciting, some challenging, and these moments often have a significant impact on our personal finances. So my aim today is to help you understand what typically changes financially during these key life transitions, some common pitfalls to avoid, and practical ways to stay on top of things. So everything I cover today is general guidance, not personalised financial advice, but it should give you a strong foundation for making informed decisions. So major life events can affect our income, our expenses, our long-term plans, and even our ability to access certain benefits. When life changes suddenly, our finances often feel the impact immediately, and sometimes in ways that we weren't expecting. So by being prepared, even just at a basic level, we can approach these situations more confidently and with less stress. This webinar is about giving you that understanding. So let's begin with career changes. A new job is more than just simply a salary change. In the UK, your wider benefits package can include pension contributions, life or health insurance, income protection, and sometimes share schemes. These make a big difference to your overall financial picture. So if you're between jobs, budgeting becomes especially important. Income gaps can put pressure on savings, so planning ahead, even by putting aside a small emergency buffer, can make the transition smoother. When starting a new role, it's worth reviewing your pension contribution rate, whether the employer offers any salary sacrifice schemes, and any insurances that might be included. It's a great moment to reset your budget and your goals. So looking next at marriage, civil partnership, or even just moving in together. When couples join their lives together, they also bring together two sets of financial habits and sometimes two very different attitudes towards money. Of course, you don't need to combine accounts. Many couples successfully operate separate finances, but it is important to have a conversation early on about the key issues in your financial relationship. So you might discuss matters like debt, savings, spending styles, but also long-term goals. It's quite common for one person in the relationship to take the lead role when it comes to managing the household finances. So being open and upfront about how you'll approach these matters, things like budgeting, for example, should help put things on a solid foundation. It's also a crucial time to update beneficiaries on pensions and life insurance policies. Review whether any joint insurance policies could save you money rather than having two individual policies. You should also consider writing a will or updating your existing will if you have one to reflect your new situation. And agree a plan for shared household expenses. If you plan also for your longer term joint financial goals, whether that involves property, building your savings, or starting a family, it's that kind of good communication here that can save a lot of stress later on. So buying a home or moving. So buying a property is often the biggest financial step that we will ever take. Affordability is about more than just mortgage repayments. There are legal fees, surveys, moving costs, insurance, and ongoing maintenance. For renters too, moving comes with deposits, referencing costs, and other upfront expenses. Schemes sometimes exist to support first-time buyers, but eligibility changes over time, so it's always worth checking official sources before applying. Then, once you've moved, make sure you're reviewing your home insurance, your council tax band, your utility providers, and doing some price comparisons to make sure you're getting the best possible deal. And it's also definitely worth thinking about ongoing maintenance costs too. There will be unexpected costs from time to time, so factoring that into your budget and savings plans should help reduce the impact of those surprises. You can also look at protecting your home through life insurance or income protection policies relevant to your mortgage. All of these items can have a big impact on your financial situation, so the better upfront budgeting and preparation that you do, the better your long-term position should be. So turning next to welcoming a child. So becoming a parent is joyful, but also financially significant. You're faced with both upfront and ongoing costs related to raising your child. So again, effective budgeting is crucial. Maternity, paternity, shared parental leave and unpaid parental leave each have specific rules. It's worth checking your employer's policies, as some offer enhanced pay in these situations. And consider planning for reduced income during parental leave, childcare costs, which can of course be such a significant ongoing expense, any child-related benefits or support that you may be eligible for, and start looking at saving small amounts for your child's future. Even small, regular amounts saved for a child into something like a junior ISA can grow meaningfully over time. Then looking next at coping with illness. So a sudden illness or long-term health change can disrupt work and income. You need to understand the financial impact of having time off work should you fall ill. Statutory sick pay and employer sick pay policies vary, so it's important to understand what you might be entitled to. Some employers offer enhanced sick pay, others provide only statutory support. Income protection, critical illness cover or emergency savings can be incredibly valuable here. These safety nets reduce the financial strain when you need time to focus on your recovery. It's also important to check whether you may qualify for additional support depending on the situation, and guidance from organisations like Citizens Advice can be extremely helpful here. Also consider factoring into your budget the building of a contingency fund to help guard against these kind of long-term disruptions that illness can cause. So turning next to divorce or separation, both of course emotionally and financially challenging. When couples separate, they often need to untangle shared debts and assets. These can include credit cards, mortgages, bank accounts, even pension arrangements. Key steps usually include things like creating independent bank accounts, updating beneficiaries and legal documents such as wills, and understanding the right to shared assets or childcare support. Seeking legal guidance early on can make sure such decisions are fair and structured properly. Then there's also the knock-on impact on your credit file, so checking your credit report and making sure changes are accurately reflected, for example, is quite important. We have a separate webinar just on the topic of credit reports, so it's well worth checking that out. So then looking next at bereavement. This is obviously an incredibly difficult situation. When you lose a loved one, dealing with finances at the same time can feel truly overwhelming. There are practical steps that need to be taken, including registering the death, and it can be well worthwhile obtaining several copies of the death certificate at the point that you register, as you may need to supply these to organisations like banks when you're dealing with the account closure process, and they're cheaper to purchase them up front rather than ordering them later on. So we need also to look at notifying relevant organisations. In the UK, we have a service called Tell Us Once, which saves you having to make separate notifications to all the different branches of government, for example. And then there's understanding the probate process. Given the documentation and time that's involved in this, it's worth checking with the relevant banks, for example, whether you actually need to obtain probate for them. And this will depend on factors like how much money is in the account you're trying to close. Each bank will have its own thresholds. Then some people may be eligible for bereavement support payments or other benefits depending on your circumstances, and guidance is available through official UK government resources and charities that specialise in bereavement support. I think above all here I'd say it's important not to feel pressured into making big financial decisions right away. Taking your time in this kind of situation is perfectly okay. So looking next at preparing for retirement. So retirement planning is something many of us mean to get around to, but it often gets pushed aside. So thinking into retirement, your income may come from state pension, workplace pensions, personal pensions, but also savings and investments that you might have. And each contributes to your overall retirement picture. It's worth checking your state pension forecast. That's free and helps you understand whether you have gaps in your national insurance record that could be filled. Think also about the lifestyle that you like in retirement and whether your expected income aligns with that vision. It's also a good time to review housing plans, healthcare considerations, and any other ongoing financial commitments. So that's a very quick whiz through lots of different types of life events, all of them important and all of them with their own financial impact. I think each of these topics could probably justify a webinar on its own, so if you'd like us to delve into anything in a little bit more detail, please do let us know. But for the moment, I thought before we finish, we'd have a think about some key takeaways for the session. So across all life events, I think one theme comes up consistently, and that's resilience. Some key habits make a big difference. So having an emergency fund, using insurance to protect against major financial shocks, reviewing your budget periodically, and staying informed of your rights and benefits. Probably the message to go away from here today with is that financial resilience isn't about achieving perfection. It's very much about something that comes from preparation, which is a gradual process. So thank you again for spending your time with us today. After the webinar, we're going to provide you with some links to useful tools, calculators, and additional resources that can help you to explore these topics further. We look forward to welcoming those of you who are joining us online also to our next webinar, which will be on the subject of money and mental health. In the meantime, we'd be really grateful if you could like this video, leave us a comment with your thoughts, and if you haven't already, please consider subscribing to the channel. Hit the bell to be notified about future episodes, and we'll look forward to seeing you soon.